Hello everybody, welcome to another episode of Erickson TV. Curtis here with Lauren. Hello Lauren.
Hey Curtis, hey everybody.
Hey, Lauren, I'm taking this this video off of MarketWatch.com, and the headline reads, "Owe the IRS money? Good news."
Good news. I doubt that.
Oh, you never heard of that. So this is kind of a carryover. We've had some previous discussions about the new Obamacare healthcare plans and about how people had deadlines to go to the exchange and get the insurance. So there's many parts of it, but the one I want to talk about today is the penalty if you don't have the proper insurance. Okay. And just like the subsidies and the tax credits are reconciled on the next year's tax return, so when you go to the health exchange and you get your insurance, or a person gets their insurance, or a business gets their insurance, and then they put in estimates based on their income, they may get a subsidy or not.
Right.
That will get reconciled on the next tax return if it was done correctly.
Okay.
Because that's based on your true income. But this is more important. This is the penalty if you did not get adequate insurance.
Okay.
And that's also going to happen on the 1040. Okay.
Right.
So this will actually come into play for the 2014 tax return, which means that you won't really notice this until we file on April 15th of 2015 or before that. So this is where it gets a little makes my head swirl a little bit, but it's how the penalty is calculated.
Oh.
And the caveat is if you wait till the next episode of this video, which we're going to do the next week, there are many exceptions to this penalty. I'll give you, but before the end of this penalty, episode 1 is I'll tell you the good news about why I said it. If you owe the IRS money, it's good news.
Okay.
So real quick, this is how the penalty is calculated. It's based on how much it's the greater of how much your household income is above the federal tax return filing threshold, and that's based on whether you're an individual or married filing jointly and have family members.
Okay.
And then it's you're taking this is where it gets a little tricky. The final penalty amount cannot exceed the national average cost of the bronze plan insurance, which is one of the choices you get on the exchange. And in other words, a higher income household could actually owe 300% of the applicable dollar amount, but not more than the cost of the bronze insurance. It's very confusing.
Okay.
and the penalty is 1%. So I'll just give you a quick example. Let's say that you're a one-person household and you're earning $120,000, and what the example is that the exemption amount is $10,150. So you take the difference of that two and times that by 1%. So your maximum penalty for 2014 would be $1,099. Okay, and that's what it is. Now the thing to watch out for in 2015, it goes up. And then by the time it gets to 2016, it's now a 2.5% penalty. So now you're talking about a $2,700 tax penalty.
Okay.
So that's just a real simple example. If we're going to put a link to this article in the transcript, so you can actually link to look at the different examples, because it's different for everybody. But the thing I wanted to say before to end this episode is that there are many exceptions that for people that are not included in this penalty. We're going to talk about this in the next episode. But this. Remember at the beginning where I talked about if you owe the IRS money, and that could be good news? Right. The only way that this penalty is enforceable by the IRS is if you have a refund. So what that means is you have to have a refund. That's the only way they can collect that penalty. If you owe zero or you owe money, they can't enforce and they can't assess the penalty.
Interesting.
Yeah, isn't that fascinating?
That really penalizes most wage earners, though.
Right.
Because well, okay.
So
that's interesting.
So knowing that, this is the opportunity for 2014, moving into next year. Maybe a good idea to do some planning with us throughout the year to look at your withholding and expected income and make sure you're not going to get a big refund if for some chance you do not meet one of the exceptions.
Right.
So let's end this episode of Erickson TV. We'll see you next time. Bye now.
See you next time.